Welcome back to this channel. My name is Ali Akbar. Support and resistance trading strategy, amazing when you know candlestick math blending. In this video, I'm going to talk about support and resistance trading strategy. First, different trading patterns such as horizontal, channel, wedge, triangle will be identified. Also, the dynamic trend line and dynamic moving average trading will be reviewed. Then the method how you can draw support and resistance in your price chart and how the price will react when it reaches these two levels will be explained with some recent practical example to clarify the trading strategy. Finally, I'm going to show you how candlestick math blending can be helpful and profitable while trading with support and resistance. Support and resistance are considered as a thin parallel convergence or divergence narrow band or narrow area that the price fluctuates between these two bands and make peaks and troughs. What it means that don't consider your support and resistance as a line because it's an area. It's not a line. Whoever considers it as a line, they lose in their trading. The peaks are above the support and the troughs are below the resistance band. Support and resistance could also be dynamic, such as moving average and trend line. That can be a great aid to quickly spot potential trend change and trend strength. Support and resistance can be seen in the following pattern: horizontal, ascending or descending triangle, rising and falling wedge, ascending or descending price channel or diagonal range, dynamic trend line, and dynamic moving average. This is Yahoo Finance K-Stock D1 time frame, horizontal support and resistance levels. You see here, this is a pattern that it's going up, and while it goes up, it makes lots of peaks and troughs. These are troughs. So the peaks are above the support. You see, these are peaks that's above the support, and the troughs are below the resistance. Here, the troughs that's below the resistance. That's the trough that's below the resistance. So there are some of these levels that it has two functions, support and resistance. For example, this until this part, it is resistance, and from here this way it acts as a support. So the same thing as this one. Up to here it acts as a support, and from here to here it acts as resistance. This is Yahoo Finance K-Stock D1 time frame. Each candle represents 1 day of trading. This is a horizontal support and resistance level. Now you see the price trend is going up and make a peak and reverses, make another peak and do consolidation here and go up and break this support resistance level, go up, make troughs here and go up and make peaks and troughs and make peak and reverses the direction and make some troughs, and it goes up, make another peak here, break the support resistance and go up, and finally it reaches to the top of upward trend and reverse the directions and make a couple of swing, and finally it goes up. I install two support and resistance level. In order that these two support and resistance level to be valid, it has to have 3 touches minimum. 1 touch, 2, 3, 4. That's valid. This one is 1, 2, 3, 4, 5. So this is valid too. Now, while the price is moving and reaches the support level, the resistant, this is resistant level, it breaks in an upward trend. So it makes, because the trend all the time makes a swing high and swing high and swing high. So it's not a good idea to go short at the resistance level, but it's a good idea to go long at the support level. Now, the same thing here, when it goes up here, it breaks the support resistance level. It's not a good idea to go short here at the resistance level, because all the time the trend make a swing high and swing high and swing high. So it's not a good idea. Maybe the trend is going upward, so you should not go short. But it's a good idea to go long at the support level. Now I highlight this area in the orange color, that in the next slide I'm going to magnify this in order to do candlestick blending, to show you where you can enter the market to get the benefit of this long upward trend. This is your finance case stock D1 time frame. That is the same graph as we see before, and I magnified this part that you can see it clear. Now, when the trend is upward, like here, when the trend is upward, the buying power is very strong, and the speed and the acceleration and momentum is very high. So as the trend continue going upward, there are some sellers that are coming into the picture, and slow down the process, slow down the speed, acceleration, and momentum. And when you approaches the upward trend, the resistance level, then there is a couple of things may happen. The first thing is the bullish power is still very strong, so it break the resistant area and go on the other side and continue going upward. Or the bullish power is becoming almost zero, then it reverses and going downward. So as it goes downward, you see that the bearish power is very strong and is, it going down with a very strong speed. Now, there is another possibility that when it comes here, the trend go in range bound or consolidation, that you don't know what to do. Now, sometime when it goes in consolidation, it retests the resistance level and may go up or may even come down. Now, in order that all the traders, they know these formations at the top of an upward trend. So when you look at that and recognize those formations, they know that they have to exit the market or enter the market. But you have to remember all those patterns. For example, engulfing, 3 white soldiers and 3 black crews, harami, tasuki, tweezer top, tweezer bottoms, and morning star, piercing. So all those patterns you have to remember in order to know that while the trend is going to go on reverse. With candlestick blending, you don't have to remember those patterns. You can blend those candles in a naked eye with your naked eye, and right away you know what is going to be the direction of the trend. So you decide right away. You you can forecast the strength of the trend. You can find the directions, and it's so easy, and you don't have to remember all those patterns. Now, for example, here when the trend is going downward, there are some buyers that come into the picture and slow down the speed, and when it comes here, it starts zigzagging, so you don't know what to do. So in the next slide, I am going to magnify this again a little bit more and do candlestick blending and show you where you have to enter the market in order to get the profit of this long upward trend. This is your finance K stock and D1 time frame. Each candle represents 1 day of trading. That is the same graph as we see before. I magnify this area a little bit more in order to do candlestick blending. And this is the upward trend. That is the top of an upward trend as we saw before. This portion is downtrend up to here, and from here the trend goes into zigzagging and in a range. So we don't know exactly what is going to happen. So we do candlestick blending between these two arrows. That is nearly 17 candles of 1 day trading each one. So the rules are still the same. We take the open of the first candle. We take the close of the last candle. And this portion is a bearish portion. We bring it all the way here. And we take the high and a low of the pattern. So we see this hammer with a long lower shadow and a small upper shadow. That indicates that the bullish or the buyers has a very strong power in the market, especially in this portion, and wanted to push the price higher. And so this is representing of 17 days of trading. 17 days of trading, that is this, and this indicates that the trend is going to go upward for sure, and you have to enter the market the candle which is closes above the closing of this candle. So this candle closes here, and the closing next one is this one, which is closes above this. So you enter the market here and you get the whole benefit of this upward trend. This is again your finance Air Canada stock D1 time frame. This is horizontal support and resistance. Now here the trend is going inside the two support and resistance, which are parallel and horizontal. And here that's the shooting star. That's a good indication of a reversal at the trend reverses. Here, for those people that they don't know, that is a bullish engulfing. And if you do with the candlestick blending, that is the equivalent is a hammer, which is an indication of upward trend. Here, this is a shooting star. That is a good indication for reversal. That's reverses. But here, we don't know what the trend is going to go. So we use candlestick blending. Between these two arrows, we take the open of this candle, we take the close of this candle, and we bring the portion which is this green portion. We bring it here, and we take the high and a low of the pattern. So this is again at the top of this upward trend. We see this shooting star. That is a good indication of the reversal. So the trend reverses and it goes downward, and so if you know this pattern, it helps you a lot, especially when you use candlestick blending. I have two videos on candlestick blending that is very helpful for those people that they haven't so far seen it. One of them is candlestick math one step closer to profit. Another one is candlestick math secret golden blending opportunity in bull and bear markets. This is your finance case stock D1 time frame. This is the support and resistance levels in channel. Now, this is a downward channel. We have an upward channel too as well. And the price is coming in this downward channel and then bounces between the two support and resistance. And finally, it breaks this resistance and it goes out. So with the same technique of candlestick blending, you can blend different places in order to find where you can enter or exit the trade and get the benefit. This is Yo Finance case stock D1 time frame. That's ascending triangle pattern. Now in ascending triangle pattern, one side is horizontal, another side is making a positive angle with the horizontal. So this way the trend is inside is going upward. So in this triangle, you make peaks here. So that is the resistance. And you make truths here. That makes support. So support into resistance. It caused breakout. So the trend is breaking the resistance and go out and go upward. Now, if we have another triangle, which is descending triangle, then it comes resistant into support, result breakdown. So it bounces inside and finally it breaks down from here. So support into resistance, result breakout, resistance into support, result breakdown. This is support and resistance using dynamic trend line trading pattern. So I'm going to show you how you use a trend line or you draw a trend line in your chart. Here there is 3 or 4 peaks that you connected with this narrow area that's called resistance. And here I connect these 4 truths with this narrow band, which I call it support line. So the price coming inside and bounces, and finally it breaks the support and going downward. This graph shows moving average dynamic support and resistance levels. I installed the SMA 20 in this graph, and the price trend here is above SMA 20. So the moving average considered as a support area, and here the price is below the moving average, it considered as resistant area. Now here in resistant area we have a peaks, the price touch the moving average, it creates peaks, and here it creates truths. So that is a good indication of support and resistant area. Now here the price crosses the moving average while going upward, so that is the place that you can enter the market. And this is where it crosses the moving average downward, which that's the place that you can exit the market. You also can use candlestick math to help you in this issue. This is Yo Finance and D1 time frame. In this chart, I installed SMA 30 and SMA 15. Now, this is dynamic moving average, support and resistance. Now, here the prices are above the moving average. So the moving average considered as support area. Here the price is below the moving averages and it considered as the moving average considered as resistant area. Now I also install the trend line which connected these 3-4 points. Now here the two moving average crosses here. That's the point that you can enter the market. Now here is a very long uptrend. Now when the price hit this support area and then it bounced back. Now in the next slide, I'm going to enlarge this area to see exactly where we can enter the market and get the benefit. This is the same chart as we saw before. We enlarge this portion. Now between these two arrows, we want to blend these two candles together. Now we take the open of this candle, we take the close of this candle, and then we take the high and the low of the pattern. So we get this big, long, lower shadow, bearish hammer. Now that is a very good indication that the buyers has a very strong power in this portion and wanted to push the price even much higher. So in order to enter the market, we use a candle that is closes higher than the close price of this candle, which is this one. So we enter the market right here and we get the benefit of all these long uptrend. This is Yo Finance Air Canada Stock D1 time frame rising wedge pattern. You see the trend is coming downward and going inside the wedge and have a couple of touches, which is almost 3 or more than 3. That is valid. And this is and it goes inside in an upward trend fashion. Now the upward trend inside, it loses its momentum and speed, and finally the bearish overcome and break the support and going downward. So the same downward trend continue and going downward. So when it goes downward here, we see the price zigzag for a while. I would like to know what happened. So we blend these between these two candles, we blend to see what happened. So we take the open of this candle, we take the close of this candle, and this is a bullish portion. We bring it here and we take the high and the low of the pattern. Now we get this long lower shadow hammer, a bullish hammer. That's a good indication that this in this portion the bullish or the buyers has a strong power and wanted to push the price even higher. So that's a very good place that to enter the market. So you enter the market with the candle that it closes higher than the close price of this candle. And so you enter the market here. And this is representing D23, 23 days time frame. So that's the equivalent of this 23 candles. And if you enter the market here, and you get the benefit of all this upward trend. Please be aware support and resistance price action could be a good technique to use while trading in the stock market, but there is no single technical analysis that is 100% reliable, and sometimes it gives false signals. So it is recommended to incorporate the risk factor and consult professional before trading in stocks. That's all, folks. Thanks for watching. Please don't forget to share and subscribe. Take care and see you next time.